Hello learners, welcome to our second lesson on control accounts. You would remember in the previous lesson we prepared the sales ledger control account. We were attempting to answer the question that was the November 2015 paper 2. Now the continuation to do with that is we said what are the uses of the control account? The uses are to detect error. And in this instance, our question is such that there were errors. Maybe we can refer to the question there. Now, part B of the November 2015 paper 2 accounting question is the total of Dundee sales ledger balances on 31 August 2014 was 2433, which differed from the closing balances in the sales ledger control account. Now, you would remember that our closing balance, according to our sales ledger control account, was $19,500. This is a quick recap from our previous maybe lesson. What we now want to do is to maybe make corrections to errors identified here. Now, remember what we said. What are the uses of the control account? The uses are we need to detect errors. We've detected them. What do? We need to correct the errors. Now, the needs of the question are A, prepare an amended sales ledger control account. Right. Before we do that, there are key notes that we need to remember. How do we know which ledger is affected by the error? How do we know that? Now, it is imperative that as an A-level accounting learner, you know which error affects which ledger. Right. Maybe quickly, if we realize that an error maybe is done in the book of original entry, that error is going to affect both the sales ledger control account and maybe it also affects the personal account or the personal ledger. Right. Now, if the error is only, maybe the error occurs in the control account only, the personal ledger is not going to be affected. Now, these are key takeaways from this lesson. Right. Let's ask ourselves, right? For example, error number 1, a credit note of $600 from a supplier had been entered in the sales journal. This error has occurred in the book of original entry. Which book is that? It is our sales journal. So such an error is going to affect both the control account balance. It's also going to maybe affect our personal ledger, that is the sales ledger. Right. Now quickly let's refer to part A of the question, which requires us to amend the sales ledger control account. Right. With me here I have tried to prepare an amended sales ledger control account. Now, the opening balance, that is the 19,500, you would remember that was our closing balance. That was our closing balance from our previous lesson where we prepared the sales ledger control account. Now, it is this 19,500 which is not agreeing. It is this 19,500 which is not agreeing with the list of balances from the sales ledger. Hence the need to amend. Right. Maybe a quick reference to our question. Error number 1. A credit note for $600 from a supplier had been entered in the sales journal. Right. What is the error? What should have been done? When is a credit note issued? A credit note is issued by a supplier should we return goods to the supplier. So those are returns outwards, which were erroneously treated as what? As sales. Is it okay? Hence, we need to deduct that from our debtors figure, right? You'd notice that we've credited our amended sales ledger control account with credit note of $600. Why? Because previously we had treated that figure as a sales figure. So our sales had been overstated, and to correct that, we then need to maybe credit our amended sales ledger control account, right? Error number 2, discount allowed had been understated by $180. Remember what we said. We said control accounts, these are total accounts. Now, the total of the discount allowed, where do we find this figure? We find it in the cash flow. So it's just the total which has been overstated. How do we correct that? We need to come back to say, okay, fine, this is where we are. We need to credit our amended sales ledger control account with $180 in that manner, right? We need to amend it like that. Then we move on to the next error, maybe error number 3. Interest on overdue customers' accounts of 136 had not yet been recorded in the books. Right, you guys, you would remember, or maybe at home, you have accounts at Edgar's, you have accounts at Jet. So what you're supposed to do is, when you're given a credit period, you have to settle your debts within the stipulated credit period, beyond which an interest is charged. Now, what happens? Suppose you owe $50, which you are supposed to pay by the 30th of June 2022. If you do not pay that $50, they are going to charge you an interest. And interest is the penalty. So it increases the amount that which you owe. Is it okay? On top of the $50 that you owe, you now need to pay an extra $5, which is a penalty, right? I'm just trying to maybe make you understand what how an interest on overdue customers' accounts maybe works. Now, if we refer to our solution there, our interest on overdue accounts of 136 is actually increasing the debtors figure of 19,500. Hence, we need to debit it as such. Right? Good. Now, let's go back again to our question. We are now on error number 4. An entry of 542 in the sales journal had been omitted from the customer's account. Now, this is a very tricky situation. From experience, examiners have always, in their reports, noted that learners are not in sync with how to correct such. Now, we shall be looking at the other four errors, how we correct these, how they affect the personal ledger, how they affect the total ledger. We shall be looking at that maybe after the break. Welcome, learners, to our second segment of today's lesson, where we are correcting errors identified or detected with the preparation of the control account. Now, you would remember that we were discussing error number 4, which we said is a common pitfall for many learners as they write their final exam. Now, this error is an entry of $542 in the sales journal had been omitted from the customer's account. The question to a learner is, does this error affect the control account? If so, how? Does this error affect the personal ledger? If so, how? Right. Let me help you understand that. Now, as you embark on this journey of correcting errors, you need to note that an error which only occurs in the customer's account does not affect the total account. Get this right. An error which occurs in the customer's account or in a personal account will not affect the total account. Is it okay? And for that reason, error number 4 is not going to affect our control account. Maybe as you can see from our answer there, we did not maybe make any amendments with regards to error number 4. Right? Let's go back to our question. Error number 5. A sales ledger account had been overstated by 823. Again, a sales ledger account is a personal account. It does not affect our total accounts. Hence, we do not include this in an amended sales ledger control account. Error number 6. A receipt of 416 was posted to the wrong side of the customer's account. Again, this error is only going to affect the personal ledger. It is only going to affect the personal account. Is it okay? So please note that errors number 4, number 5, and number 6 are not going to affect our control account balance. Hence, they are not included in the amended sales ledger control account. Lastly, error number 7. Sales returns of 521 had been recorded in the sales returns journal as 125. Now, the sales returns journal is a book of original entry. An error which occurs in the book of original entry is going to affect both the personal account and the total account. Hence, this error would then affect our control account. We need to correct it. What happens? What is the error? The sales returns was 521. How did we record that in our books? 125. What does this amount to? We understated our sales returns figure. So we need to make that amendment when we prepare our amended sales ledger control account. This is the sales returns. It had been understated by 396. Right. So we then need to balance off. You would remember your balancing off. We get the greater of the two totals, which is the debit side is exceeding the credit side by how much? By 18,460. Now that's an amended sales ledger control account. Now, is it enough to only talk of this? No. We need to then reconcile the sales ledger control account to the sales ledger balances. Why do we need to do that? Remember, in our first lesson, we said, what are the uses? What are the uses of the control account? The uses of the control account is it checks the arithmetical accuracy of the sales ledger. And in this instance, it is very clear that there is inaccuracy. What then do? We detect errors. We locate errors. Where did that happen? After doing that, what do? We correct the errors. So we need to reconcile maybe the sales ledger control account to the list of sales ledger balances. Right. Here it reads reconciliation of list with control account. Let's do this. What was the balance in the list of balances? That is the sales ledger. We have balance as per sales ledger. There, we are given that in our question, which is 20,433. Right. Now, let's go back to our question. We go back to our question. Right. Our question reads, a credit note for $600 from a supplier had been entered in the sales journal. What did we say? An error in the book of original entry affects both the personal account and the total account. Hence, this error actually overstated our debtors figure. We need to take it off. Right. As we can see there, we are deducting the credit note from our debtors figure of 20,433. We deduct the credit note of $600 there. Now we need to go back to our question, look at another error. So error number 2, discount allowed had been understated by $180. This is a total which had been understated, right? This is just a total which has got nothing to do with the personal account. Such an error does not affect our list of balances. Hence, we do not need to record that, or we do not need to make that correction maybe in our reconciliation statement. As you can see there, we did not include it there. Right. Error number 3. Interest on overdue customers' accounts of 136 had not yet been recorded in the books. This is an error which occurred in the books of primary entry. An error of omission affects both the control account and the personal account. What was the error? It's an interest on overdue customer account. So how does it affect the sales ledger balances? Remember we said this is a penalty which is charged over and above the amount that the customer owes to the firm. So we are going to add this interest to the balances that you already have. Right. As you can see, our interest of 136 has been added to our total debtors figure of 20,433. That's what we've done so far. Let's go back to our question. Right. Error number 4. An entry of 542 in the sales journal had been omitted from the customer's account. It has been omitted from the customer's account. Where do we find the customer's account? We find it in the sales ledger. So the sales ledger balances are what we call the list of balances. Hence, we need to add this 542, which was an omission made maybe in the customer's account. If you look at our question, or rather at our solution, there we have an omitted figure of 542, which seeks to then increase the amount that our debtors owe to us. Right. I think so far, learners, you are picking something from this maybe discussion. Which error affects which ledger? So what we're going to do in the next segment, we are going to finish up with maybe the last 3 errors on how they affect our list of balances. So see you after the break. Welcome learners to our third and final segment of this lesson, where we are correcting errors. Right. Prior the break, we were looking at error number 5, which reads a sales ledger account had been overstated by $823. Now it means that our debtors figure has been overstated. We need to maybe review it downwards. So as you can see from maybe our statement of reconciliation there, we have an overstated figure here, 823, and we are deducting it from our debtors figure of 20,433. So we need to review down our debtors figure there. Let's go back to our question. Error number 6, a receipt of $416 was posted to the wrong side of the customer's account. Now, this error, many learners have challenges correcting such an error. Maybe we need to highlight how it affects many learners. What is happening here is we have A account. We have A's account here. Now, what is happening to A's account? A is paying us $460, right? And we are supposed to credit A. But what did we do there? We debited, right? So, to correct such an error, we need to come here to say, A made a payment of 416, 416 there. Instead of crediting A, we debited A. what then should we do? We need to record here bank 416. But doing this will only serve one purpose, which is to cancel out the error. It does not then serve to show us that A settled his account. We need to record and show that A settled his account. So there is need for another entry of 416. Now this is showing that A has settled his or her account. So what did we learn here? Maybe quickly, if we have an error like that, bank 416, it means we come here, we record this 416 twice. So it's recorded as 832. Right. This is how we correct the error there. Okay. Now, if we go back to our question, or rather our solution, you realize that a misposted entry of 832 is serving to correct two scenarios. One, to cancel out the misposting. Two, to make the correct entry, as I've shown on those ledger accounts. Now, a quick arithmetic there will give us a corrected balance of 18,460. A corrected balance of 18,460. If you compare with our amended sales ledger control account, you will realize that this figure 18,460, this is our debtors figure. Now this debtors figure should be the same with the one found in the sales ledger balance, right? So let's check our statement of reconciliation. You will then agree with me that this is our debtors figure there. Now that does it for the correction of errors. Okay? So learners, I believe we now are in a better position to make a reconciliation of the list of balances with control accounts. We are also maybe in a position to prepare an amended sales ledger control account. More practice will definitely bring us maybe closer to perfection, right? But our exam will also require us to maybe prepare a statement of corrected net profit. A statement of corrected net profit. Now, if you refer to our question, now you realize that our profit for the month was 6,144. But this was before the discovery of errors. Now, what then should we do? Now, the question says, prepare a statement of corrected net profit. Right, how do we do that? So here we have drafts. Draft net profit. $6,144. Right. Let's go back to our errors. Which errors affect the net profit? Which errors do not affect the net profit? We are going to quickly identify the errors as we come to this statement of corrected net profit. We run down that. Okay. Now, a credit note for 600. These are returns outwards, treated as sales. So obviously, we have our profits understated and overstated at the same time. So one can choose not to include this because the effect is the zero sum, right? There's an overstating of 600 and an understating of what? Of 600. So we may ignore such an error when we are correcting our profit. Okay? Then error number 2, discount allowed had been understated by 180. How does this affect our profit? Obviously, our profit is going to be what? To be overstated, Right. So here we deduct discounts allowed. That's 180 there. Error number 3. Interest on overdue customers accounts 136 and not yet been recorded in the books. Remember we said interest, that's income which we are receiving from what? From our customer. Hence it has to increase our profits. So we need to add our interest there.
Right, so quickly wrap up.
Now, errors number 4, number 5, and number 6 do not affect our net profit. Why? Because these are errors in the personal accounts. They do not affect our net profit. But error number 7, which is sales returns of 521, had been recorded in the sales returns journal is 125. So that's the sales returns understated there, which overstates our profits. We need to reduce such. So we say sales returns understated. Understated there. It has been understated by 396. So a quick arithmetic will give us a figure of 5704, $5,704. That's our corrected net profit. So thank you, learners. We have embarked on a journey of preparing our control accounts, correcting errors, correcting the net profit. This marks the end of our topic. In the next lesson, we shall be looking at suspense accounts.